Hey folks, good morning and welcome to the rate update with Dan Frio. I am Dan Frio and this is your opening bell for mortgage rates and everything real estate. Hey folks, good morning. The Russian-Ukraine war continues on, unfortunately. The highlight there is that it's pushing a lot of people out of the stock market into bonds, but unfortunately they're not buying mortgage-backed securities right now because of the risk there as well that people are seeing. So we're seeing people fleeing to bonds, but corporate and government bonds. And I'm going to show you that here in a second. So let's get over to the news for the day and let's start breaking this down. So we see the headlines right here. Some good highlights that we're seeing is right in this area here. Yesterday, consumer credit numbers came in and they were dismal. If you look at this, the previous month we were at 18.9. Just look at the number and focus on the numbers going forward. The forecast was for 23.8. We came in at 6.8. A huge drop in consumer credit. So that means people aren't using credit cards right now. They're fearful, but unfortunately people continue to buy. Okay, so we go down through here and you see the wholesale inventories, they're staying stable, but wholesale sales month over month, last month was 0.2 and we're at 4. Okay, so that's showing that people are continuing to buy. All right, so until we really start tapering our buying patterns, we're going to continue to see inflation. So let's get over to where mortgage rates open the day, and we're back to kind of where we were about a day or two ago, or last week, I mean. So let's go across here, and I'm going to go over the mortgage rates and just caption how this is all affecting the mortgage-backed securities market. So mortgage rates on the 30-year fixed coming in at 4.09. I'm not going to go over the points because you can look right down here at the bottom and see how much that would cost you. And again, for the biggest highlight, these are not my rates. I'm a mortgage broker. I deal with over 130 lenders in the country. So I find you the best rate out there. This is the national average. Okay, so we go to the 30-year fixed, 4.09, up 13 basis points, up over an eighth of a percent. That's a pretty big move. The 15 years at 3.4, up 7 basis points. The 30-year FHA/VA is coming in at 3.55. That is up 5 basis points as well. Look, we got a nice consensus right across the board here, up 5 basis points. The 30-year jumbos 3.55, coming in up 5 basis points, and the 5-year ARM is 3.68 right now, coming in up also at 5 basis points. We're going to focus down in here. This is where I was saying the trends for the MBS markets are bad. Okay, the MBS this is showing it's down 34. That's a pretty big number. Let's see over here and let's refresh it to make sure we are current. Which direction are we going? We're going down. That's bad. So let me rephrase this for you just so you guys know what's going on or how to read this. The MBS market is basically the ingredient or the biggest component of your mortgage rate. And we just had a consensus vote on YouTube. People want me to talk on Saturday about how is your mortgage rate calculated. So that's what we're going to talk about on Saturday. So stay tuned for our live event there. But what makes up your mortgage rate, the biggest component is the yield on the MBS or the mortgage-backed security bond. Okay, when we're focusing on this number, as the number goes up, it would be green. Okay, and that would mean rates or yields are coming down. So it's how much you pay for a bond. The more you pay, the lower the yield. So in this case, if you check out over here, sorry, it's reversed. The MBS market is down 36. So when the number's down, that means rates are going up. Okay, so that number is pretty big. We usually see on an average day, maybe a move of 8 basis points. So this is about 5 times that number. So let's go to the next screen here. And this is my newsletter that I send out every day. So check out all my social media. You can go to my website to find this. So how do you do it? You go to the rateupdate.com, scroll down to the bottom, and this is all my social media here. And if you're on YouTube, you can check it out on the top right. So if you find value in my channel, all I ask you to do is please give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. I'm trying to condense my videos in the morning, just giving you what's going on with rates and the economic calendar. And then throughout the day, I'll post another video, either if there's a catastrophic event going on that's causing rates to move big, I'll post that. If not, I'll go over some program features or things that I think will be educational and entertaining to you. So thank you so much for watching. I'll see you later this afternoon.